Let's focus in, zoom in, if you will, on our company of the year here at Yahoo Finance. That is Zoom Communications. Of course, the stock has had an enormous performance this year, and it has become a verb as well. Let's bring in Ryan Koontz. He is Rosenblatt Securities Senior Research Analyst to talk more about Zoom as well as some of its peers. And I just want to ask Ryan by asking what's going to happen for this company in 2021. Because things sort of grew so abruptly for Zoom this year that there were definitely some growing pains at times. Has it matured as a company, and what does that mean for its growth next year?
Yeah, good morning. Hi. My concern really is that I view the growth as not as sustainable. Obviously, what they've put up has been nothing short of exemplary, and hats off to some incredible execution this year. As we look at over the next few years, what does that true growth rate look like? My concern really is that a lot of their sales, pushing on 40% of revenues, are coming from small business and consumer, which, may not be that sticky on the other side of the pandemic.
Ryan, just staying on growth, if I read your model correct, you're looking for net income to fall next year versus this year. Can the stock still outperform when the fundamentals such as that are changing?
Yeah, it can. It's all about the top line, really. I think investors are looking at what that sales multiple is, EV to sales ratio. Zoom's trading at a very high premium here, over 30 times next year's revenues. And so, the question is, what does that true growth rate look like as we look out the next couple of years? From an earnings perspective, obviously they've done incredibly well. I expect, operating margins to come down as the company catches up on OpEx. They've really underspent this year, couldn't keep up with revenues. And for example, last quarter, they only spent 3% of revenue on R&D, and the company expects that to be up closer to 10% going forward.
Now, there's been some speculation recently of Zoom getting ready to launch email and calendar services. Really, that would put them in direct competition, even more so with Microsoft and Google. How big a business do you think that business could be for Zoom if they in fact launch it in early 2021?
Yeah, it's interesting. I feel like Zoom, has to decide who they want to be when they grow up here. Are they going to be the king of the small business and want to sell an entire solution to the SMB segment? That's one way to go after it. I don't think investors will put the same kind of sales multiple on that business, but I think it is an intriguing option. At the enterprise level, I think they have a really hard time displacing, the Microsofts and Cisco's and Google's of the world, really.
Well, and Ryan, picking up on that point, the chart you have in your note is great. And I was going to ask, basically you're joining us on the phone today for all the kind of hoops that banks have to go through and compliance, whatnot. What's it going to take for Zoom to be a solution that, firms like yours and major enterprises with major security concerns want to work with? And you mentioned the incumbents there. Is there any path, I guess, in your view, for Zoom to start to kind of crack that down? Because, again, big enterprises, small segment of their revenues.
Right. And that's the real question here. So, the cost of change at the enterprise level is very, very high. The cost of change in the SMB world is, a fraction of that. So that's really their biggest challenge, is how does Zoom, build a large stable of enterprise customers and see a big flip where enterprise is the largest component of their revenue. And it's certainly a big piece of growth. But my concern on the valuation is that we could see quite a bit of churn and subscriber losses at the low end of their model and low end of their subscribers. I've been predicting they would see new competitive entrants coming in at the low end, and we're already starting to see that with some competitive offerings from RingCentral that were announced just in the last month or so.
Well, and Ryan, if I could just quickly follow, maybe to narrow it a little, is it an issue with Zoom's security that is maybe holding it back there, or is it just some of the dynamics that are challenging for a company like them when they call up these big businesses?
I don't think there are great security issues. There may be some security issues for certain market verticals, like government or defense. But I think the bigger issue comes down to channel, and I don't think that's a a metric or a measure that a lot of investors appreciate as much as they should. The channel to reach large enterprise is incredibly valuable. Zoom does not have a strong set of horses there yet. They're certainly growing it. But that's my main concern, is that their channel to reach the enterprise just isn't built up sufficiently to put together sustainable growth, in my opinion.
Ryan, Eric Guan, the CEO of the company, founder of the company, was not on the last conference call, and he seems to have taken a bit of a step back. Is that something that concerns you at all?
His loss certainly would be, or his lack of involvement would be. I don't have any updates at this time or insights as to any developments there, honestly.
Gotcha. Okay, so let me follow finally and ask you for other companies in your coverage universe. Since you have this neutral rating on Zoom, and it's going to be tough to match the growth next year. So what's going to be sort of the next breakout? What is a stock under your coverage that has more opportunity, or the most opportunity for upside in 2021?
Yeah, I mean, I look at names like RingCentral. Probably that's been my top pick the last couple of years. Remains there now, and they've got a valuation at about a 50% discount to Zoom, and I view their enterprise channel as probably certainly up there in the best in their peer group. They're selling into the unified communications as a service market. They overlap with Zoom a bit, but they're really kind of coming at a similar market opportunity from different angles. Their business mix is quite a bit different today. But over the long term, what's interesting is few of these companies are staying in their lanes anymore. So we're really seeing a convergence happen between a lot of these companies over the long term. So we'll see if we start to see some accelerated M&A in this space, in that case, then I really view the companies that have the most advanced channels to market, particularly the enterprise market, as those really holding the keys to success for sustained growth. I like RingCentral. I like Twilio as well, which is a different business model as well in the CPaaS space. But both those companies have spent the last 5 years building out terrific channels to market globally, and lots of opportunity for sustained growth relatively early in their penetration phase in the enterprise market.
We will keep an eye on them next year. Ryan Koontz of Rosenblatt Securities, thank you so much, and Happy New Year to you.
Thank you to you as well.